Hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Guys, if you haven't yet already, consider subscribing. Give me a thumbs up. It really helps out the channel. I have over 7,000 subscribers, so I thank each and every one of you. It really humbles me that you find value in my video and in my content. Typically, I'm usually late to all the news and all the stuff. I have a full-time job and 2 little kids, so it really humbles me that you guys watch my video, even though my information is typically probably a day old. But anyways, thank you guys so much. If you want to further support the channel, check out the links in the description below. You get free stocks with Webull, free stocks with Robinhood. Sign up for Cash App, you'll get $5. That also supports the channel and supports me. So I appreciate if you take a look at that. Also, check out this email. I got an email from Tesla. If you've been watching my videos for a while, you'll know that I've been talking about this in a few of my other videos. Tesla short shorts. I ordered like 10 pairs of these short shorts. I'm going to be doing a giveaway. 100% free. You just have to be a subscriber. So make sure you subscribe. Watch this video and subscribe for this free giveaway. As soon as I get these Tesla short shorts in, I'm going to be doing a live stream and doing a giveaway for these Tesla short shorts. So you have to be a subscriber. Whoever wins it, I'm going to check my subscriber list. Make sure you are a subscriber. Also, if you don't want these Tesla short shorts, that's cool. These short shorts are a limited edition, so they will be worth more money in the future. But if you don't want Tesla short shorts, that's cool also. I will substitute it with a $69 Amazon gift card. So don't miss out on this giveaway. Please subscribe and, if anything, just subscribe for the giveaway. So this video is going to be a little bit long, so I apologize, but there's a lot of information I want to go through and just my mindset and my thought process about this particular stock. So let's get down to business. So, NIO has been blowing up. NIO is like probably one of the hottest stock of 2020. When you look at these numbers, it makes Tesla's numbers look small. So NIO is absolutely incredible. This is the stock chart of NIO this year, just nothing but up, up, and up. It was trading at like less than $5 at the beginning of the year, and now over $27 as of today. 1 month performance, 30%. 1 year performance, 1,843%. Year to date, 591%. So, like I said, the performance on NIO stock is just absolutely incredible. Their numbers are also good, reporting good numbers, good revenue, good sales, good delivery. So everything about NIO is just, undeniably fantastic. So I was thinking, how can I get involved in NIO? Because honestly, I've said in my other videos, I'm not a NIO bull, but I'm not blind. Also, I see NIO is doing fantastic. Their numbers are great, like I just said. But I am just not a NIO bull. I have my reasons. I don't want to get into it in this video because it'll just make the video even longer. But I have my reasons why I'm not a NIO bull. But I need to get into this NIO. So I was thinking, what is Tesla doing and what is NIO doing? How do they kind of mesh together? Because they play in the same space, they're doing the same things. So Tesla recently released their autopilot full FSD beta version.
Now you see that there is a stop sign. The vehicle stops at the stop sign, stops to observe oncoming traffic, pauses, waits, and proceeds and remains in the right turn lane. Now this is really cool because it needs to make a left at the light, so it proceeds to aggressively change lanes and get to the left turn lane in a safe and efficient manner and stop for the left stop light. Now notice as the car is waiting at the left stoplight, the oncoming traffic had a green light. It's not getting confused. Cars continue to go. You'll now notice cars pulling up alongside of it, cars turning from the opposing lane, and all while the Tesla is not phased, waiting patiently for its light to turn green. And now our light comes green, and you'll see how the Tesla turns perfectly into the lane, all while obeying traffic laws and signs and lights.
Self-driving autonomous vehicles are going to be in our future. I predict in the next 1 to 2 years, it's going to take off. It's going to be the point where it is more dangerous not to have a autopilot / full self-driving vehicle. So this is just, it's going to happen. It's going to happen in the consumer market. It's going to happen in the retail market. Drivers of semi trucks, delivery trucks, like all this is going to come down to cost. How much is the company going to save to have an autonomous vehicle? And when it comes down to cost, things move fast. So there's no doubt in my mind that this is the future. Tesla is on the bleeding edge. They're at least probably 2 to 3 years ahead of anybody else when it comes to full self-driving. But even Tesla, even Elon Musk has said himself in his latest conference call, he has even said himself that autonomy is not going to be the key to Tesla. Everyone is going to have autonomy. Full self-driving, every company is going to have it, whether they develop it themselves or they buy it off the shelf from somebody else. It is going to be something that's going to be mass marketed. So even Tesla realizes that autonomy is not going to be exclusive to Tesla. But Tesla is, without a doubt, in my opinion, the number one player. They are probably, like I said, 2 to 3 years ahead of anybody else. But in every single market, there's always a number one and number two. Tesla, in my opinion, is definitely number one. Who is going to be number two? It's like, Apple and Microsoft or Google and Apple. There's always a number one, number two, Pepsi and Coca-Cola. So there's always a number two. And you could still make a lot of money investing in number two. So who is number two, in my opinion, in the self-driving autonomous vehicle? Here we go. Mobileye. Mobileye and NIO partner to bring level 4 autonomous vehicles to consumers in China and beyond. So it was about a year ago that this article came out that NIO and Mobileye was going to partner. I just remember this and I'm like, this is it. This is the key to some, in a way, investing in NIO without paying the exorbitant market cap price for NIO now that has ran up. So, like I said, I'm not interested in buying NIO, especially at these record high prices. There's just not a lot of room for safety once the stock has ran up like 1,800% in the past 12 months. So, no way, I'm not going to invest in NIO now. So I want to invest in something that is on the downtrend. So this is the downtrend. This is Intel stock. So if you didn't know, Intel is the parent company of Mobileye. And look at this. This chart has been beat up. This is the chart that I like. These are the charts that I like to invest in. A strong, worldwide company, strong name, strong balance sheet, huge market, and they are completely beat up. Look at this stock. They have reached $44, basically the low that they got down into during the huge market crash in March and April of 2020 due to the illness situation. So this is the stock that I like to look at. Look at this, just beat up year to date, down 25%, 1 year down 20%, all reds. So how is this going to work? Under the planned collaboration, Mobileye will provide NIO with the design of the self-driving system building on Mobileye's AV series. A level 4 AV kit comprised of Mobileye IQ system on chip, hardware, driving policy, software, safety software, and mapping solutions. So NIO does understand that, they could have a fantastic EV car. They could have this lifestyle, the NIO battery swap, the NIO coffee shops or whatever they have, their whole lifestyle, their brand, their vehicles. But if they don't have full self-driving, if they don't have autonomy, they're basically dead in the water, because who's going to want to drive your vehicle when Tesla, the vehicle that drives right by you is a Tesla that's self-driving and the driver is there, reading a book or taking a nap or whatever. I think that's where it's going to come to. So you have to have full self-driving. And so NIO, isn't doing their own full self-driving. They need a partner with somebody. And this is it. Partnering with Mobileye, which I think is the number 2 player right after Tesla with autonomous full self-driving features. All right, so that's one piece of news, but just recently, Mobileye even has better news. Check this out. In September, just last month, Geely Auto Group, which is the largest privately held automotive manufacturer in China, unveiled the highly anticipated premium EV Zero Concept from Lynk & Co. The Zero Concept EV will feature Lynk & Co.'s co-pilot solution powered by Mobileye Supervision. So there we go. Now Mobileye is also partnering with this huge automotive manufacturer, the largest privately held automotive manufacturer in China, Geely Auto Group. The deal we announced with Geely Auto Group today, which utilizes our proven surround view advanced driver assistance system, pays off that philosophy. Geely Auto Group will use Mobileye's full stack 360 camera solution in its brand new premium model L2 Plus. All right, so you see, I'm trying to demonstrate that Mobileye is making massive moves, pretty much all over the world, mainly in China, but also in the UAE. Here's another article. Mobileye and Intel Mobileye, an Intel company, and the United Arab Emirates announced a strategic collaboration to propel development of autonomous vehicles and mobility services in Dubai. So like I said, in the States, on Tesla, pretty much my channel, everyone's channel, we always talk about Tesla self-driving, because they are the biggest player, they are the number one, they're going to get there first. But Tesla is not the only player in the game. The world is very, very big, and Mobileye is capturing a big portion of the rest of the world. And so let's take a look at the revenue from Mobileye. So revenue in Mobileye is not very impressive. It doesn't make headlines. It's very under the radar. So you'll see in Q1 of 2019 it was 209 million. Q1 of 2020 it was 254 million. So roughly in 1 year it was about 800-ish million revenue. In Q2 of 2020, when the illness hit, they took a dip. Pretty much everyone did, down to 146 million. But Q3 of 2020, they were back to growth. It's not shown on this chart, but Q3 of 2020, I think they were back up to $230 million in revenue that quarter. So like I said, very, very under the radar. Just about a little bit under $1 billion of revenue per year that's generated from Mobileye. But check this out: Mobileye could quintuple revenue by 2023. The company could quintuple its revenue in the next 4 years. Additionally, Mobileye Mobility as a Service leadership sets it on track to leadership in a $160 billion TAM market. That's total addressable market. So if you guys are not keeping up with self-driving mobility as a service, we think, when I say we, the industry does think that mobility as a service is going to be a massive market. In this article, they're stating a $160 billion total addressable market. Mobility as a service is basically what Uber is, what Lyft is right now. Basically, transporting a person from A to B is a service. Like basically a taxi service, but instead of having a driver pick you up, you're going to have a autonomous vehicle pick you up. So there really be no reason to really own a car anymore. Whenever you need a car, you could just hail a car. You don't have to pay for gas, insurance, maintenance. You don't have to pay for anything. You just hail a vehicle and it'll be 100% autonomous. So this is where the market thinks that we're heading into the future. And this could be in the next 3 years, next 4 years, however long. This is going to be a massive, massive market. And Tesla also understands this. That's why they're working so hard to bring robo-taxis to the market. That's why they're putting so many vehicles on the road to get all the data in order to propel their self-driving technology to the next level, so they could fully release it to the mass market and then move and transition from not making vehicles, but just providing vehicles for mobility as a service. All right, Mobileye expects L2 plus, so that's their level 2 plus autonomy volume, to grow at a 63% CAGR to 13 million units by 2023 and 3.6 million L2 plus cars expected in 2022. Mobileye shipped 17.4 million IQ chips in 2019, continuing to grow volume at a 40% CAGR. Given its small size, Mobileye still seems a massively overlooked asset in Intel's portfolio, and one that has yet to be priced into Intel's share value. I 100% agree with this. Mobileye was trading at roughly 27 price to sales ratio prior to rumors of Intel's acquisition. Mobileye could be, or would have been, worth $135 billion by 2023 as a standalone company. All right, so I talked about the future. I talked about mobility as a service and how Mobileye expanding into China, expanding into UAE, and pretty much a lot of places all over the world. But what about Intel itself, the parent company? The stock is crashing. We're at pretty much all-time lows, 52-week lows. So here we go. So even their 2020, their Q4 of 2020 outlook, they're saying that they're going to be down on revenue 14% year over year, down on operating margin, down 9 points year over year, and EPS, earnings per share, down 28% year over year. So they are just having a rough year. The illness situation, they were late on their next generation chips. This latest Q3, they reported that their data center market is also down. Not a lot of people are spending money on data centers, so they're just having a rough year. And this is a time, in my opinion, to be buying stocks like this. Massive company, huge growth in the future with Mobileye, and they are just beaten down like a pulp. So just a summary, third quarter revenue was $18.3 billion, down 4% year over year. Data-centric revenue declined 10%, while PC-centric revenue was better than expected, up 1% year over year. Third quarter, GAAP earnings per share was $1.02, down 25% year over year. Year to date, generated $25.5 billion in cash from operations and $15.1 billion of free cash flow, and paid dividends of $4.2 billion. So even though they're having a really rough year, they're still paying their dividends. They paid out $4.2 billion in dividends. They made $25.5 billion in revenue, and they are generating $15.1 billion in free cash flow. So, these numbers still are really, really strong. So even though they're having a rough year, like I said, these numbers are pretty strong, and I think the market is overreacting a little bit, and I think they have beaten this stock down way more than it should be beaten down. That's just my opinion. So they are raising full year revenue earnings expectations. So to quickly wrap this up, let's look at their balance sheet really quick. How strong are they in a financial situation? So their balance sheet is not too bad, pretty strong balance sheet. Cash and cash equivalents, $3.3 billion. Total current assets, roughly $37 billion in total in current assets, and total assets of $145 billion, while the current total liabilities is only $22 billion. So this is the makings of a very, very profitable company, in my opinion, in the future, especially when the stock is down at the 52-week lows, $44, $43. So just to wrap this up, pretty strong balance sheet, plenty of cash to get them over this rough patch. Massive market opportunity with their Mobileye. Their next generation chips have been delayed. I think they said delayed 1 year or 18 months, something like that. I forget. Like 12 to 18 months they're delayed. So their next generation chips are delayed. That they took a huge hit on their stock price for that. Now their revenues are down. Their data volume, their data revenue, data center revenues are down. So like I said, they're taking a huge hit. But I think the stock is oversold, in my opinion. So huge, massive market opportunity by 2023 with the whole self-driving revolution, with the EV vehicles partnering with NIO, with Geely Auto Group, partnering with UAE. So they're going to, reach a massive market with their self-driving technology, with their chips, and like I said, this is going to be the next generation of mobility as a service, and they're taking advantage of it with Mobileye, something that's really low on everybody's radar. Nobody really even talks about Mobileye. Very, very misunderstood, and nobody really talks about it because it only is generating less than $1 billion for Intel in a year. So I think this is a massive opportunity. So check this out. This is my position. I bought in starter position here at $44.87 per share. I put in $897 right now. So I'm going to watch this. I'm going to see how far it drops. If it drops down even lower than this, I will be picking up more shares because, like I said, I just think this is way oversold. Down to $44. If it drops down to $42, which I have my next buy at, if it drops down to $42, I'll be probably doubling up this position, and we'll see where it goes from here. Hey guys, I'm recording this after the fact. I forgot one very, very important slide. So this is very important. This is the history of the stock chart of Intel. So why am I very interested in buying right now at the $44, $43 range? So you have to look at this chart to understand. So basically we are at 52-week lows. We didn't hit this low. Last time we hit this low was March and April of 2020 when the whole stock market crashed. And so you see everywhere that I circled, it's like 1, 2, 3, 4, 5, 6, 7, like 6 to 7 times that this floor has been tested, and about 6 or 7 times it has bounced back up from this floor. So $44, $43 is pretty much the floor of this stock. You really have to go back to 2017 to be below this $43, $44 price. And the next bottom price would be $35, and that wasn't we didn't see that until 2017. So pretty much for the last couple of years, $43, $44 has been the floor for this stock. So I don't foresee this going any lower than $43, $44. So that's why I think this is the best time to pick up this stock. Guys, thank you guys for watching. If you watched to the end, thank you guys so much. It really helps out that you watched to the end and give me a thumbs up. I appreciate you guys so much. Give me a thumbs up. Check out my other videos. Make sure you subscribe for the free giveaway. Catch you in the next one. Peace.